Good afternoon, Just, and welcome to the fifth session of today's summit, which is entitled Wealth, the Case for a Wealth Tax or for Other Radical Thinking, in parenthesis, which is an enticing addition to the main topic. I'm Matt D'Ancona. I'm one of the editors at Tortoise, and I'm really delighted to be hosting this session, which addresses an issue that has grown in salience and apparently in popular appeal in the last 11 months that have been absorbed by the pandemic in this country and elsewhere. As ever, please join in the chat, which is being steered by my colleague Ellen Halliday. We really want to hear what you think about what's being discussed and to bring you in. We've got a limited amount of time, and I want to pack in as much as I can because this is such an important subject in all sorts of ways. We have a really stellar lineup of speakers. Dr. Arun Advani, who amongst his many distinctions is an assistant professor of economics at Warwick and was a member of the Wealth Tax Commission, a really excellent outfit that delivered its final report in December and is well worth consulting. Deborah Meaden, I'm not sure if she's arrived yet, but is certainly en route, is familiar to all of you from Dragon's Den, I'm sure, and even more of you possibly from Strictly, but being a TV star is really a sideline to Deborah's remarkable lifelong accomplishments as an entrepreneur and investor since she launched a glass and ceramics company aged only 19. And finally, Martin Wolf, who is, as I'm sure you know, simply one of the most important and essential signals of wisdom in the noise of contemporary media commentary. He's the chief economic commentator of the FT, and he's one of the very few columnists whose work is and has long been an absolute must-read. So welcome to all. I want to dive straight in because time is, as I've said, pressing, and ask you, Martin, it's become commonplace to argue for a wealth tax, particularly in the last year, not simply then, but it's been especially pointed, and to propose, if you like, the overturning of what had become a cultural assumption that income and wealth were to be treated differently. So just as a starter for 10, do you agree that our attitude collectively to wealth is changing, and if so, how?
That's not a question I'd expected, because it's a political and social question of which my competence is very limited. But it seems to me very clear that our attitudes to inequality have changed. That's more important in a way than anything else. And our attitudes to government spending have changed. Attitudes to inequality, I think, have changed because of the perception that we have become an unequal society. Actually, the evidence suggests most of that happened in the 80s, but it still made us a relatively unequal developed country, certainly by European standards, and the sense that this isn't reversing, and a lot of people who are, as it were, at the bottom, are struggling, and that's become obviously a very big feature of our political debate. I'm not sure myself how much that sort of feeling about inequality focuses on, as it were, income inequality or wealth inequality. It's, I think, sort of mixed up together, but it probably covers both to some degree. And then the second point I made is it seems to me pretty clear we've got to a point in our politics, and I think the Cameron Osborne government essentially tested that proposition to destruction, where we have clearly said public spending will not be lowered. And if you look at public spending as it is now, and you look at aging, the future, that means we're going to have to get more revenue from somewhere. And those two really rather profound changes inevitably change the debate on taxation and inequality and their interaction. That seems to me clear.
Would you? So, on that basis, Martin, would you frame it as in a sense, a practical fiscal question, which is that we've moved into an area where it's clear that there is going to have to be higher spending on a range of things, That has been, there's been a sort of case study of that in the pandemic, but clearly there are many things that will outlast the pandemic that require huge amounts of public investment. And so in a sense, it's a practical case, or is there, and perhaps they're not a choice, or is there a growing awareness that the wealthy have done too well proportionately out of the last 20 years, and that there needs to be some form of corrective measure in our fiscal structures?
I think both are going on. Aaron's commission focuses, in a sense, on the former. I mean, in the sense, and that's a particular aspect of it, as I read it, which is we've got this huge increase in debt. Something has to be done about that. That's part of the fiscal situation we face. That's clear. And a wealth tax is a fair way of dealing with that one-off thing. And that seems to me a perfectly reasonable argument. I don't entirely agree with it, but it's a perfectly reasonable argument. I think we are in a debate which has, quite understandably and rightly, two dimensions to it which come together. One is we need revenue. We're not going to support a significant reduction in the size of our state. There's no political demand for that is going to work. And at the same time, if we're going to get more revenue, we should do that in a just way, one would hope, at least I would sort of say, well, not too economically costly a way, and a way that also achieves other objectives. And if one of our objectives is to have a less unequal society, then a wealth tax or variants on wealth taxes, inheritance taxes, gift taxes, land taxes, there are lots of things that go along with this, corporation tax, lots of things we could discuss in this, capital gains tax, all the rest of it. But anyway, the taxation of wealth, capital, and so forth is a natural and inevitable part of this discussion. What's the famous line? Was it Willie Sutton? Why do you rob banks? Because that's where the money is. Well, if you're going to significantly raise taxes, you're bound to look at people who have most of the money.
And do you, just finally on this point, Martin, what have your personal enthusiasm for the wealth tax? If you had a forced choice, would there be a particular kind of wealth tax that you would opt for?
Yes. This collapses an enormous amount of discussion. My first best, because I would like to focus on hereditary inequality, will be a very, very high tax on lifetime gifts. So basically to limit the passing down of huge estates through the generations. That's, as it were, a first bet. And that's very specifically mainly aimed at the emergence of a plutocratic elite by inheritance. My second, an alternative which interests me is, though I think it's really too difficult and costly to do, but that's a technical argument, will be to have a wealth tax, but it will be an annual wealth tax at probably something in the neighborhood of 1.5% to 2%. And it would raise a fair amount of revenue. If done, it would create lots of problems about how you do it, but to leave aside. And the argument for that is that a very large part of the income from capital is in our current system not really taxed. And that is a real problem because capital generates a lot of income which is unrealized and from which people can consume, and people don't discuss that. So that would probably be my second best. I also have a very strong desire for land taxes for Ricardian Henry George type reasons, because people can't take land away. And that is very satisfactory from a tax point of view, unlike generalized wealth taxes, because it's very, very easy to do. You can measure it. So there are lots of dimensions of these choices. What I like about this debate, and very much like about the report, is that we're now having a much broader debate about what we want the state to do and how we're funding it and what the right aims of all this are, which we haven't had in years. And I think that's very desirable.
Thank you very much, Martin. We'll come back to you, I'm sure, in due course. Aaron, if I can come to you, you've devoted more time to this question than most, and no more than most of us will ever forget, and will forget more than most of us will ever know, rather. What are the practicalities of a wealth tax, building on what Martin said? Is it deliverable? And do you feel that we've reached a moment where the work you were doing in the Commission has now become not just philosophically and theoretically defensible, but also practically deliverable?
Yeah, so thanks very much. So very much what we were trying to do at the Commission was to understand kind of the role of wealth taxes, and whether either an annual or a one-off wealth tax would be sensible in the UK tax system. As Martin highlighted, in the end, what we came down on, sort of for the purposes of thinking about raising revenue in the short term, if the government wants to raise revenue in the short term, we said that a one-off wealth tax would be the best way to do it. That doesn't mean that we particularly stand by the idea that one needs to be raising taxes in the short term, but if the Chancellor, which he seems to be, has committed himself to raising taxes in the short term, we think that's the way to do it, and we kind of lay out how that's deliverable. I agree with Martin's point also that when we're thinking about the annual taxation of wealth, there are lots of different firstly, there's lots of different kinds of wealth tax that you can have. So there's a sort of wealth tax, which is a tax on the ownership of wealth, just for owning it. Then there are other forms of taxation of wealth, like capital gains tax, income tax on dividends, and so on. The current tax system in the UK for taxing wealth more generally is broken. There are problems whether you look at capital gains tax, income tax on dividends, or inheritance tax, as Martin pointed out. We didn't therefore go for supporting an annual wealth tax as an addition to the UK, as something that would go for a sort of a broad swathe of the population, for the reason that if you have the kind of political capacity and legislative capacity to get on and sort of fix the taxation of capital, we think it would be much more straightforward for kind of regular levels of wealth to deal with just fixing some of the very obvious and very known problems on capital gains tax or inheritance tax, which are are long-standing. You get a wide range of people who tell you what they are, and I'm happy to go through them. I agree, though, if there's to the extent that there's an interest in growing inequality at the very top, that will not be fixed by capital gains tax. It will not be fixed by even a kind of fixed inheritance tax. For that, you really do need to have an annual wealth tax, and that would be something then you'd want really focused on the very top end of the distribution, if that's what you're interested in. I don't think that it's really a sensible thing to have for a wider swathe of the population. So we talked, for example, for a one-off tax, you could start at say like £500,000 of wealth, so £1 million for a couple, and that would cover 1 in 6 adults in the UK. That's just not something you could deliver for an annual wealth tax. It would capture too many people, and the administrative cost of it would be very high relative to sort of what you would get in return for a lot of those people. So you'd want to start at a much higher level, and it's hard to see why you would do that rather than first fixing existing problems that we know about on capital gains tax and on inheritance tax.
The reason being, I take, Aaron, that you wouldn't go for that is that it would simply trigger an upsurge of argument that people were being taxed repeatedly for money they'd already earned and paid tax on.
I mean, so that's certainly an argument that people have. It's not even the reason that we were kind of against it. It was really a practical concern. So to have a tax on the ownership of wealth, you have to get everyone who is covered by the tax to list out all of the, even if it's just for themselves, they have to list out all of the wealth they have, calculate the value of it at a point in time, and send all that information to HMRC, and then to tax that. It's more straightforward for the most part to tax, say, realizations of wealth. So I sell something and I can be taxed on the capital gain. That's a more straightforward thing to do, and we don't do that correctly at the moment. There's, there was a report from the Office for Tax Simplification. The Chancellor may or may not enact it. It had some. I don't think it solved all of the problems, but it fixed some of the problems that we have. Inheritance tax, similarly, at the moment, Martin made the point about land value taxes and the fact that that's actually an easy thing to tax in the sense of land, because you can't take it away. Yet, when you own agricultural land, you can pass it on, and you do not pay inheritance tax on it. So actually, given that it's one of the easiest things to tax, it's one of the things we least well tax. Similarly, we currently subsidize people putting money into a pension during their life, which makes good sense. We think that people want to then have that pension as something they can live off in their old age. But we then actually encourage them to not take that pension in their old age, but actually to pass it on, because if you pass it on, you don't pay inheritance tax on it. So again, these are kind of very straightforward things that we all know how to fix. There are more technical ones that, again, sort of more detail than we should go into on this call. But there are lots of things that one could fix and that are well known. And I think those are just much more straightforward fixes that don't require setting up a new system, and that would raise substantial revenue and would make the tax system fairer. And so I think the fact that it will be very efficient, it's just getting rid of distortions that are currently problematic in the system that don't have any business being there, and they're fairer because they kind of equalize the treatment of income from different sources. Those seem like sensible things that we would all support, and the sort of most straightforward place to start. If we did all of that and we then had time to think about more, come back to me. I'm happy to talk about how we could tax wealth with the wealth tax better, but I would really start from fixing existing problems.
Well, just one technical question I did want to trouble you with was how your one-off tax would work. The commission lit upon. I mean, what would it tax and how would it operate?
So the one-off wealth tax that we proposed would be a tax on the value of all wealth, net of all debts. So take your house if you own a house. If you own it with somebody, then split the value of that in two, and obviously take off the mortgage if you, presuming you have a mortgage. Add on to that the value of any ISAs you may have, pensions you may have. If you run a business, then the value of the business, whatever that may be. Add on the value of all of those things. Take off all the value of the debts. So your mortgage debt, as I said, but credit card debts, anything else you owe. That's what we think of as the value of your wealth. Then set some threshold. And the threshold is really a political question, not something that we set up ourselves. We gave some examples. We have a tax simulator that people can access, where you can set different thresholds and see how much revenue you would raise, but pick some threshold. So you could say £500,000 at the individual level, £1 million for a couple. Or you could take, another example we had was say £2 million, which is the top 1%. So pick that threshold, and then you're taxed on the value of all of the wealth above that threshold. So, for example, the most widely reported was this £500,000 threshold, and that says for a couple with £1 million in wealth, they pay precisely 0 wealth tax. For every pound they have more than that, they're paying 1p for every pound of wealth they have above that £1 million as a couple. So that was kind of the way. An example of the structure. Again, that 1% is a rate that is kind of a political choice depending on how much revenue you want to raise. So that's sort of the structure of it, and it's really important. I think one of the things that we do get asked a lot about. We were really clear. We think that houses should be included. We think pensions should be included. We think businesses should be included. There are a few reasons. Firstly, if you exclude those things, or some of those things, you're going to lose a lot of the revenue. But the other thing that's really important here is there's a real important issue around horizontal equity. If you say to somebody who's a homeowner, well, we're going to exclude the value of your home because your house is not something that you think of as something that should be taxable for some reason. I mean, already we don't charge you capital gains tax on it, so we already do privilege the ownership of that house. But if we do that, someone who's about to get on the housing ladder, that's saved up, has their money in the bank, hoping soon to try and buy a house, they haven't quite got there yet. They're being taxed on the value of that saving, while the homeowner is not. If you decide to not tax pensions while you tax businesses, then someone like me who's got money in a pension but doesn't run a business isn't being taxed, while Deborah will be taxed on the business that she runs. And that, again, if she thinks that she's not putting money separately into a pension, but she's expecting to at some point sell off some of those businesses as what she retires on, that doesn't seem very reasonable for her. Conversely, it doesn't seem reasonable to tax my business, my pension, and say, oh, but because Deborah is investing, that means that she should be excluded. So I think it's really important for horizontal equity reasons that you capture all of the different levels of wealth. And to the extent that people are then worried that you're sort of capturing too many people and sort of ordinary levels of wealth that you didn't want to tax, that's really about setting where that threshold should be, not about saying which asset classes should be in. It should really be all asset classes. And in a sense, that's really the problem with things like a land value tax, is that they're sort of fine in the sense that you can't walk off with the land. But the problem is it's really distorting the choice between asset classes of whether you want to own land or whether you want to own other assets. That's really the distortion of that causes.
And just to be clear to nervous homeowners in the audience and elsewhere, you're referring to equity rather than
so take off the mortgage
valuation. Yes. So
yes, very much so. So take off the value of your mortgage off that home, and at that point that's your equity. And then if you own it jointly with somebody, split that in two, and then that's giving you what is sort of your wealth within that home.
Understood. I think Dean Andrews had his hand up. Dean, are you there? Would love to hear from you if you are.
Sorry, I think that was a technical issue.
You weren't proposing to join in.
Sorry.
Good to have you with us. Can I come to Jack Leslie if he's in the audience in the call? Jack, are you there? No sign of Jack either. Okay, third time lucky. Hang on.
Sorry,
Here comes Jack. Hi, Jack. How are you?
Good, thanks.
Now, you are another person who's done an enormous amount of work at the Resolution Foundation on this. Rather than me clunkily try to paraphrase your work, can you give us a sense of what your investigation tried to establish and what it came up with?
Sure. So, I mean, the Resolution Foundation, we're a think tank that looks at trying to help people on low to middle incomes, and we've sort of had, I guess, two strands of research that we've been doing. One, we've got a 3-year project looking at the experience and understanding wealth of people across the distribution. There's lots of research out there on what kind of wealth looks like at the very top of the distribution. We know that's kind of increasing, but what can we say about sort of the whole of the country? And I think one of the key things that we've been picking up on that strand of work is really does speak to the points that Aaron was making about how broken the sort of current system really is on wealth taxes. So we know, so I mean, I think it's, as we've kind of already touched on, we are already taxing wealth. Like we talk about whether we should introduce a wealth tax. We are already taxing wealth in a whole bunch of different ways. Inheritance tax, capital gains. We're sort of effectively doing it to some extent through the sort of gross value of your property on stamp duty. Though obviously you still pay it if you're renting, all these kind of things. And over the past 30 years, the total value of wealth in the UK as a share of the economy has more than doubled. And that actually hasn't been particularly a shift in necessarily the kind of how much of a share of that total wealth people at the bottom are holding and people at the top are holding. But the kind of total pie has grown by about double. But at the same time, we've seen those wealth taxes, all the things that we currently have the share of the economy that the share of revenue that is being paid on those taxes has stayed completely flat. So effectively, we're now half tax rates on those taxes, and that is starting to have an effect on thinking about sort of equity across different groups in society. The other strand of work that we've been doing, which was actually jointly with Aaron, so he could definitely talk about this too, is looking at how good the data is in the UK, and for us to understand what kind of wealth is out there. And actually, we found that the sort of position of data we have is pretty good, but the official measures that we get from the Office for National Statistics are really under capturing wealth at the very top of the distribution. Your kind of Richard Bransons, your Barclay brothers, they're not filling in kind of government surveys. They're holding wealth in places that aren't necessarily obvious. And when we try to account for that, there is a fairly material something like maybe 5% of total wealth is missing for those very, very wealthy people. And actually, if you take that into account, the inequality, or understanding of inequality in the UK means that it is much more unequal than maybe official figures are showing. And I think that does again build some of the case for why you would want to do a wealth tax.
And so, Jack, I can see the political narrative that would lead to a wealth tax with some thorny bits along the way. The greater sort of fiscal question is, how confident can we of establishing a system which would be quite a lift for any government, least of all one that faces the in-tray that this one has, would actually lead to a genuinely revenue-raising mechanism?
Yeah, so I mean, I think that's a really key question for what kind of the future looks like, and what post this crisis, to the extent to which we need to increase revenue for the government, what they should do. I think that there are kind of low-hanging fruits on fixing the system as is. The business assets disposal loophole, which was entrepreneurs tax relief, I think that's quite poorly targeted. Doesn't really do what it's supposed to be doing. Scrapping that probably raises you $1 billion. There are things around capital gains loopholes, so the uplift at death, that again raise you a serious sums of money. You're talking about the billions. And so those kind of things that you can do to fix the current system without necessarily changing any tax rates, without sort of necessarily doing anything more more substantial, does actually start raising material sums of money. If this is post-crisis, there needs to be a kind of big fiscal consolidation because of the kind of economic scarring that we've had, and sort of tax revenues are structurally lower in the future. then I think you possibly do need to go further and start thinking about sort of a fuller a full kind of wealth tax. And that really comes into the point that Aaron was making, is you can raise quite significant sums of money, but it's just a sort of political decision on, where you set that threshold and where you set what your tax rate is going to be. If you want to set it in such a way that, the vast majority of people don't pay it over the course of their life, by definition, you're not probably going to be raising significant sums of money. If this is something that sort of, most of us at some point over the course of our life might pay, then, yes, this could be a really big part of how we do sort of taxation in the future. But that does require some really significant sort of thinking about how the UK system should work.
Absolutely. Thanks very much, Jack. Can I come to Joanna Carpenter now? Joanna, are you there?
Yes, I'm here.
Hi, Joanna. Welcome. You made an interesting point about intergenerational justice in the chat, and I wondered if you, rather than me paraphrase it, you can tell us what you're thinking.
I'm just really concerned that you have an existing burden on younger generations due to an aging population. And I think if you look at some of the statistics in the UK, it's well known that a lot of people in that younger generation are unlikely to be able to afford their own homes. So I'm very concerned about the impact of the pandemic, which is very much described as almost like the impact of World War II in terms of levels of debt and how long it will take to really iron out that repayment, that we burden them with it in terms of income tax. And you raise also tensions. My background is in pensions and life assurance, and I did a project back in, oddly enough, the 1980s about how you could raise tensions between the generations, because they begin to resent effectively elderly people on the basis that they're paying for them, and they haven't got the same lifestyle that we had or that our parents had, and I think we just need to be mindful of that, because we already have a number of divisions in our society already in the UK following the referendum, and it needs managing through, I think, in terms of any proposal.
And it's interesting, isn't it, too, Joanna, that for many years there was this assumption that it was almost a given that we would pass on more to our children than we had inherited, unless of catastrophic misfortune. But the norm was to assume that was the case. That is no longer an assumption that can be safely made or even possibly predicted in the majority of cases.
No, that's correct. And I made a subsequent point, which is that when you put in you put in a wealth tax, you need to be careful, therefore, about the pension point, because what you really want is a degree of self-sufficiency in an aging in the population that's no longer economically active and raising income tax, so that you give a bit more breathing space for that smaller percentage of working population, because we're aging. It's a problem for the whole of the EU. It's not just the UK. But if you look at the dynamics of an aging population, we live longer and we're sicker. That's also a fact. So there's huge demands on the NHS, and I am genuinely concerned about that impact on the younger generation, because what you need them to be able to do is to also enjoy life and not feel that they're completely burdened by an aging population, and that they have an opportunity to have some of what we enjoyed.
Absolutely. Thank you very much, Joanna. We're joined now by Deborah. Welcome, Deborah. Thank you so much for labouring to get through the foliage of the digital universe to be with us. We're thrilled you're here. So thanks for that. Forgive me if I just sort of dive in, because everyone is longing to hear what you have to say. And I suppose the question I would ask you, as someone who's got such a public profile on issues of business and wealth and so on, but has also in your personal life has had such achievement in business building. When you look at the world and you see the great inequalities that have emerged, and also a sudden and unabashed shift towards stimulus spending around the world, there is clearly a moment of opportunity. Let's put it no more than that. Do you think this is a broader opportunity that an enlightened and interested and genuinely a thoughtful government could, if it were capable, seize and use to great advantage to essentially recast the way in which we tax and spend and regulate the financial sector?
I love that question, because yes, you have to know that you're coming from the eternal optimist. You know, I think that we're capable of sorting out any issue that's thrown at us, and actually we're capable of building a better life. And we've had, through the awfulness of this pandemic, we've actually had a moment to all of us think about the way we want to live our lives, the contribution we want to make to society, you know, how we want to run our businesses. So we have been able to be reflective. And I think we're all making promises. You know, we're certainly, everybody I talk to, they're going to change in the future. These are the things they're going to hold on to. But this is only a moment, because we also have a history of making promises, and then actually life gets back to normal. We get really, really busy, and we all carry on behaving the way we behaved before. So this is a real moment to seize an opportunity to think very, very carefully about how we want to live. And this is therefore a moment that the government should be reflecting that. You know, it should have its moment to say, actually, this is a bigger issue than just wealth tax. You know, really, wealthy people should be wanting to contribute to their society. You know, what's going on here that wealthy people are trying to hold on to it over here, and underprivileged people are trying to say, you know, please, can we have some of that? What's broken in that piece? And to me, that's the much more interesting question that we should be asking here, not how do we change our taxation system? It's how do we change the way we look at the way we contribute to society? I, however, underpin that with a big issue. And that is that there is an awful lot going on, and something needs fixing quickly. The pandemic has meant that, you know, the huge disparities between the wealthy and the not wealthy is, you know, it really has been brought into the spotlight. It has to be dealt with quickly and now, because otherwise that gap's going to get wider. And Joanna was talking about the tensions, you know, between the different parts of society, and they're just going to get wider. And you know, it's real at the moment, but you've also got to change perceptions. You know, the wealthy do contribute a lot to society. They can do more. So I think we need to be really, really careful that we tackle this as a whole piece, not just say, well, actually, how do we deal with wealth tax? And because there is so much going on, you know, we've got COVID, we've got Brexit hasn't sorted itself out yet. The world's still in a lot of flux. The optimistic side of me says, oh, we've got an amazing opportunity. The pessimistic side of me says, I've got a really, really bad feeling about this.
What can you expand on that? Why do you have a bad feeling?
I have a bad feeling that we just don't have the bandwidth. And when you don't have the bandwidth, you tend to revert back to what you currently have, or the systems you currently have. I mean, you know, I've been thinking about how could we make this work, and with our digital capabilities, you know, I could be paying more tax at my point of purchase. I could carry my tax code around with me. You know, if I buy something, buy a luxury item, I should pay more for it. I could afford more for my milk. You know, so carrying a tax code around with me and being able to think way beyond these are the taxes we've currently got, and this is how they interact with each other, and all of the unintended consequences that Aaron was talking about. You know, there's huge problems with wealth tax because it just drives behavior. If there's not a will to contribute to society, it just drives behavior to say, no, I'm going to save my money, I'm going to put it over there, I'm going to keep it away from everybody else. So it's a much it's about buy-in. There's also a very big piece on this, and this is something I talk about personally. I want to contribute to society. I think I do in many ways, and I don't do enough in many other ways. I think the businesses that I invest in, you know, they all contribute to society. That's fantastic. Taxes actually annoy me a bit. I'm not saying I shouldn't pay them. I want to pay my taxes. I do pay my taxes. I'm not offshore. I don't do anything to try and avoid my taxes. However, I don't like the way they're spent. And there's a big confidence issue, particularly at the moment when we look at all the big, you know, the things about the PPE contracts. If I'm going to willingly contribute and if I'm going to want to really make a difference, I'm going to want to know that that money is being spent properly. And I'm going to want to know the outcome of that. And this is where we're going to have to think really, really carefully how we join up the collection of the cash and how it is shown to be distributed, redistributed, and really impacting on society in exactly the same way as I would in a business. I'm going to get this money, I'm going to put it there, and I want to see what the outcome is. That is a really big piece of work.
I mean, you raise a huge and compelling issue, which is that when Gordon Brown introduced his windfall tax on the privatized utilities, it was hypothecated for spending on the New Deal. And that has tended to be the way this has been approached, which is we'll fleece you for this and spend it on that. I think, Deborah, if I understand you correctly, you are asking for something much deeper than that, which is a comprehensive trust building exercise that enables people to know that if they are being taxed more than they were in the past, that the money is not being squandered. Is that correct? Is that a fair way of assessing what you're saying?
Absolutely. You know, and I've sat in Dragon's Den some and said, I think I care more about the way my money's spent than you do. The trouble is, once money becomes second or third hand, it starts losing its value all of the time. You know, I do care more about my money than you care about my money. You know, and we've got to find a way of closing a loop that says, look, I'm really happy to participate, contribute. I really want to make a difference. I also want to know that money is being applied well, and I want to know the outcome of that. I want to start seeing that. And obviously some of these issues are hugely long time. It isn't quite like business because, you know, I can build something and tomorrow we're taking money in a year's time, hopefully we're making a profit. But I want to understand what the key drivers are, and I want to see that the contribution that I want to make is actually being made. And I've got to say, there is a huge amount of confidence being chipped away as far as I'm concerned. And as far as, you know, most entrepreneurs I talk to saying, I really don't mind contributing to society. I really mind my money being wasted.
It's an interesting one, isn't it, though? Because, you know, if I was in the unlikely event, well, frankly, vanishingly likely event that I was head of a global corporation, and I was sitting here, I would say, well, hang on a minute, I provide jobs, I take risk, I show enterprise, I fund public services through the taxes I pay already. And now you're saying that because I have fixed assets or other forms of assets that are, in your view, undertaxed, I have to add even more. You know, that will be a significant reflex from business, won't it?
Well, it will, but that's a bit of a disappointing reflex.
Yeah.
Because there isn't a limit to how much I want to contribute. Listen, even if I was just being selfish, I want to live in a safe, you know, healthy, affluent society. That's what I want to live in. Now, if I want to live in that society, I'm going to have to help build that society. And it doesn't mean to say because I've done A, B, C, and D that I can't do E. You know, it's surely I should always be looking. If you're in business, if you're an entrepreneur, you're constantly looking for the next thing that you can do. So I think that's disappointing, but that comes back to this disconnect between tax that's seen as this thing over here and the actual outcome of, you know, what actually happens with that. How does that contribute? How does that make my life better because my society is better, my communities are better? There's just a disjoint.
Thank you so much, Deborah. That's really fascinating. I want to come to our co-founder and editor-in-chief, James Harding, who had a observation to make, I think partly in response to some of what Martin had been saying. James, are you there? There you are. Hi.
Yeah, hi, Matt. Thank you so much. This is a completely fascinating conversation. I wish we could take the whole day on it. And actually, I wanted to come on a point that Deborah was making, and I suppose Gregory Mulligan I was seeing in the chat, was that to an extent, Deborah, it seems, talking about this failure of politics rather than the tax system. And Martin, I wanted to just get a sense from you. You wrote a column couple of weeks ago that was setting out the options for the Chancellor, not, you should raise this tax or you should raise that tax, but you should think about tax reform based on a return to fundamentals. And when I heard your point about lifetime gifts and land taxes, right, that's based on a couple of fundamental principles around, the fairness and the effectiveness of taxes. And I just wondered really two things. One is, if you could tell us a little more about exactly how lifetime gifts and land taxes in your estimation would actually work, how you would impose them in practice, and whether you think that the imposition of those taxes in detail is completely incompatible with democratic politics. Because all the signs are the things that you were suggesting in that column are not likely to be what we're going to be hearing on March the 3rd.
Well, this is such a huge set of issues. Both Aaron and Jack made, I suppose, what I would regard as the classic economist's point, which is no sane human being would design our current tax system. And of course, no sane human being has. It is absolutely riddled, because it's the accretion of approximately 200 years. I'm not joking, 200 years. I think the income tax was introduced as a temporary measure in the 1840s, 1846, perhaps. No, it was reintroduced because it was also been there in the Napoleonic era. Anyway, and we've had nothing but temporary wheezes, stamp duty. I could go on forever. And the result is the tax system is a total mess, which doesn't give us a coherent or effective or efficient system for raising revenue. And what I was arguing is, we're not going to fix all of that, but the last chancellor who really looked at this and tried to develop something coherent, though I agree with some of it and disagree with other parts of it, was actually Nigel Lawson. And that's nearly 40 years ago. So I argued in this column, there's no good argument for raising taxes now. We can discuss that if you like. Sunak is a pretty smart guy. Why doesn't he go away and spend some serious thought about the following question? If you wanted to start from here and to create a system which looked fairer and more efficient, generated less ludicrous cliff edge, marginal tax, and all the rest of it, what would it look like given the inheritance? You can't change everything. And I think that's an opportunity that an intelligent chancellor should take. I personally think in the process, the question of inequalities of wealth and inheritance and the role of wealth taxes should be considered for reasons that we can't go into now. I tend to think that though there's an attractive feature to wealth taxes, I think they are unbelievably problematic to make work, either as a one-off or even more as a continuous annual activity. I think the problems of doing this will be very, very, very large, but I think we should explore them. I do think inherited wealth is a really big issue. And so to take your question, I would say, and this was an idea which I think Dennis Healy had in law in the 70s, if I remember correctly, that instead of having an inheritance tax, which is a lottery, if you give something away more than 7 years before you happen to die, it's fine. And if you give it less than 7 years away, you get taxed. And if you're so wealthy, you don't need your capital, you can give it all away to your children long before you die. It's completely outside the inheritance tax system. That's all absolutely ludicrous. So yeah, I think looking at taxation of inheritance, which would, I think, have to become a cumulative tax on lifetime gifts, would be a pretty obvious and I think workable way to start looking at the inequality problem. That doesn't look at the revenue stuff. There's lots of other things to do, but the main point I was trying to make, we have an unspeakable system which has got more and more complicated, largely because in the last 20 years of Brown and Osborne, who are hopeless tinkerers, and Sunak should try to undo this because nobody knows what our tax system is actually trying to do.
Well, thank you. And the land tax, would you just say on the land tax, so how would your land tax work?
Well, I have very relative ambitions here. My ambitions tend to be modest in some areas. There were basically 2 points that worry me about the taxation of land. So I agree with Aaron's comments. First of all, council tax is a grotesque thing. It's the only general, well, council tax, business rates, and the taxation of site values are a total mess. The taxation of site values doesn't encourage development, which we clearly want. So we should have, in my view, have very heavy taxes on land which has been designated for development and which is undeveloped, really heavy. And so because we need more development, above all, of housing. Second, the council tax is grotesquely regressive, and it's on a base of valuations which is 20 years old. 20 years old. I mean, that's just laughable. And third, the business rate and the council residential property tax system have got completely divorced from each other. And everybody knows the business tax rate system doesn't make any sense given the incredible transformation of retail activities. So I'm not asking for something very ambitious, but I would go for bringing the taxation of developed land together, both residential and business, into a coherent system with the same, we can discuss the details, with annual revaluing, of course, which many countries do. And I would add to it a pretty heavy swinging tax on undeveloped land, which is being designated for development, because we need to get rid of all these ridiculous land banks. So that's my short summary of what I would do as a very third best, but I think will be a very large improvement on the mess we have now in this one corner. And people talked about capital gains tax, that's a total mess. Corporation tax, I mean, obviously everywhere there's a mess, but this is what I would do myself if I were given the land tax challenge.
I think, Martin, you're arguing yourself into the position of heading a Royal Commission on Taxation. Before we draw to a close and time is marching on, I just wanted to give Aaron and Deborah a chance to offer some closing thoughts. Aaron, what are your final reflections, briefly?
So, I mean, I think I agree with most of what's been said. I think actually, in a way, to my surprise, we find ourselves in violent agreement that the system is broken, that we mostly agree on directions for reform. I think I agree also with Martin on the kind of logic of a gift tax. I think administratively it is actually would become much more difficult to administer. I think if you think an annual wealth tax is difficult to administer, a gift tax is going to become very difficult to administer. So I think administratively there are some serious issues, and it's one of the things that we're giving some thought to in terms of another area to go and think about and study how you could do it if you wanted to. But I think in the short term, I think the best kind of result for us in terms of the work we've done at the Wealth Tax Commission is that we've really kickstarted a serious discussion about the way we tax, the way we run taxes in this country, and how this should be designed, what the important issues are, generally broadly issues around the taxation of wealth and capital. And I think, whether or not you agree with our proposals, I think the fact that we're all talking about it and that we're actually seriously considering what the options are is a really good result. I think it's important that we have this debate, and a lot of it, there's a lot of stuff that we as economists and technical people can sit around and say, here's what we can tell you about design and what the right ways to do things are. But I think there's also a really important political and democratic argument to be made, and that's why we said we weren't going to touch questions like rates and thresholds, because that's really one of the fundamental questions of how we want our society to look and what we think about inequality, and that's nothing we have anything special to say about. So I'm just really glad this conversation is happening.
Thanks for contributing to it, Deborah. Your closing thoughts.
Well, I'm not the technical person here. There's people who have an awful lot more how to make it. It's easy for me to say words. Somebody else has to work it out. But I do have a plea, and that is, we need to think about this as a whole. Tax in itself is the end game. Sorry, tax in itself is a route, but we have to decide what end game we want. And before we decide what what we change in the taxation system, we've got to be really clear on that. You know, we've got to stop talking about this just in terms of cash. We've got to start talking about it, the impact on society, the impact on environment. You know, otherwise we're going to end up with another complicated tax system that has unintended consequences, that doesn't actually achieve any of the things that we really, really want in society. So there has to be a platform to really understand. It's a social contract. It's the platform that says, actually, let's start with the outcome and then let's build back to the system that actually gets us as close to that as possible. There is no such thing as a perfect taxation system, and actually it changes all of the time anyway. You know, but I can't help feeling we really need to be clear on where we want to go before we attempt to design anything that's going to get us there. I mean, that's easy for me. I'm not Aaron. I don't have to sit there and work this out and say, but surely we should be starting with our desires and then we work backwards.
Thank you, Deborah. I'm not going to abuse any more of your time by keeping you from your cup of tea, but I do just briefly want to sum up some of the thoughts I took away from this fabulous session. I think that what's striking is that there is a consensus that there is unlikely in the foreseeable future to be a return to anything like austerity, however much Rishi Sunak might in his DNA long for there to be, and also that inequality has risen up the political agenda to an extent that it will have to have some sort of fiscal, that would have to be reflected in some way in the fiscal system before long. I think on that note, Deborah is absolutely right. One can never detach these issues from their political cultural context, and also correct to say that before we talk about spending lots more money, we need to establish greater trust in those that are spending money, which is in itself a heavy lift. On the question of what form a wealth tax might take, you know, a kind of, you know, very clear range and spectrum of options that we need to narrow down, ranging from Aaron's discussion of a one-off tax to Martin's proposal of land taxes and other measures. And I think also within that, it's very important to bear in mind Joanna's discussion of intergenerational justice, which I think will be a very important driving force in the resolution of these issues. But not surprisingly, I found Martin's encapsulation of the whole issue as being both extremely problematic and definitely worth pursuing. One of the reasons that I've read him with such pleasure for so many years, and I'm very grateful to him for that conclusion, and to the other wonderful speakers, Aaron and Deborah, and to you all for making so many excellent points in the chat. I wish we'd been able to come to more of you, but thank you all very much.